Dear colleagues, I suggest that we start now. It's a pleasure to be again in such a workshop, which is very, very traditional, I have to say. I would like to say a few words on the organization of the panel, if I may. We have two main issues, namely the global economy, the way we can analyze what is happening, the risks, the main features of the global economy, and all the risks that might impact the global economy and each of our economy and each of our continent. That's one. And then we have, it's also traditional, focus on the issue of financial crisis, the lessons drawn from the crisis of 07, 08, the rules and regulations and the prudentials that have been decided at a global level, at a national level, at a continental level, and all what goes with the screening of the assets and liabilities, the pros and cons of the various decisions which were taken. And this is traditionally a second issue. And we try to separate the first part of our discussion and the second part of our discussion, whilst reflecting with the speakers. All speakers have both, if I may, competence. They are economists on the one hand, and they have a very large wealth of experience and of responsibilities on the real economy on the one hand and finance on the other hand. So it seems to me that it might be a little bit artificial to separate and to say to some of our speakers and panelists, you have to speak only on this or only on that, when they are, again, very interesting to be heard on all the main messages they might have in all domains. So what I would propose is the following. We will have short introductory exposition, and I will try to be as, I would say, a strong master in order to limit the time for the main messages from our panelists on what they consider, both in the real economy and in the financial sphere and in the, I would say, prudential sphere, as what they consider important, in 8 minutes, and under the control of all of us. And then we will engage in a very vivid debate, and it is the interest of this panel that we can have a lot of ideas, exchange of ideas, questions, of course, but also remarks. The method would be a question or a remark on observation should last 2 minutes, and no more if we want to have, again, appropriate interaction with the benefit of the experience and the competence of all that are participating. But if you want to interrupt somebody to make a very short remark, you raise 2 hands, and then you have the possibility to intervene for a very short time, but to say, I am in disagreement with this or that, or I am in full agreement with what you just said, or I have to correct, and so forth. So we will then try to have, again, the maximum amount of exchange of views. I think it's very, very important. So if John accepts, I will ask him to speak first for 8 minutes. Not yet, sir. And then we will go in the order of the list that has been established by the organizers without further ado. So let me only mention 2 or 3 things myself as an introduction. we had the worst financial crisis since World War II, which could have been the worst financial crisis since World War I, had we not engaged in extraordinarily swift and bold measures. I'm speaking of the central banks and I'm speaking of the government. We avoided a dramatic depression, 29-30-like. We did not avoid a very, very grave recession, but the real situation in 07, 08, 09, 10, 11 was much more dramatic potentially than what happened because the authorities and the private sector took a lot of very bold decisions. So we have a difficulty to understand why today we are still in a very, very difficult situation. And it seems a little bit bizarre to explain why the monetary policy of the central banks are so accommodating, why we still have a growth, a real growth, which is so miserable, and why we see that the financial sector in general is still in a situation which is far, far, far away from normal. I give you my own key, if I may, clue to understand the situation. The real problems of the advanced economy was much worse than we suspect, because again, we took the appropriate decision to limit the extension of the drama which was unfolding in the years, say, in 08 to oversimplify. That's one. Another element which I consider very, very important is that I was speaking of the advanced economies, and it's true that the crisis was a crisis targeted on the advanced economy. The emerging economies behaved quite well, at least during all the years of the heat of the crisis was dramatic for the advanced economy. And this crisis, since was the moment where the emerging economy appeared to be very influential in the governance of the world. And it was the moment where the G7 passed the baton to the G20. It was the moment where in Basel the central banks opened up their informal governance or their formal governance to all systemic emerging economies and emerging central banks, when before it was the privilege of the advanced economy to design the prudentials and to work out in a restricted Basel committee the appropriate concepts. So in terms of, I would say, history, this crisis is the moment where the world governance becomes, in theory, and I hope very much in practice, really inclusive and absorbing the emerging economy, the systemic emerging economies are as having a decisive role also to play in global governance. I mentioned that en passant, and I will give the floor immediately to John, because the IMF, of course, was inclusive, not sufficiently, by the way, but inclusive since the very beginning. But the informal governance, so-called G7, was not inclusive at all. It was the privilege of the advanced economy. So that was only a short introduction, but I expect again that we will all intervene as vividly as possible. John, you have your 8 minutes, please.